the Fed, the composition of the Fed, and what I will call the perception or raised question of perception of the independence of the Fed. What does that mean for markets and how investors have been positioning here?
Yeah, well, I don't want to get into the legal aspects of it all, but the 4-3 majority doesn't strike us as necessarily conclusive of anything. You've had plenty of decisions in the Supreme Court, for example, that have been 5-4, but others that have been 6-3 and some 9-0. So who nominates a person to serve doesn't necessarily dictate how that person actually finally serves. Moreover, it's only 4-3. So that's not conclusive either. But we do see in the markets that there is some ticking up in inflation expectations, particularly in those longer dated inflation expectations. For example, you look at a 5-year inflation swap, that has now ticked to its high for the year. And that's kind of concerning because it shows that at least there are some folks out there who are willing to speculate that, well, gee, a 4-3 majority could end up becoming decisive. I don't dismiss that possibility either. I just don't think it's necessarily something we can conclude at this particular point in time. But you can see the markets trying to maybe price the potential or the probability for that 4-3 majority to actually become ultimately decisive.
So to dig a little more deeply into that, is the read-through there then around the possibility of expectations of an increase in inflation, this idea that you have a Fed that cuts and maybe cuts aggressively enough that inflation is not arrested?
Yeah, that's the idea. So, and again, I want to stress, we don't believe that 4-3 is necessarily conclusive either way. But we do observe in the markets that there is some movement higher in longer dated inflation expectations, which indicates that markets are willing to at least price a possibility that the 4-3 majority could be decisive for maybe much lower rates in an extended way that could bring back inflation.
Okay. So how do you position yourself right now if you are an investor, especially as we have stocks trading near record highs, but we know big tech has really been leading the way recently?
Yeah, that's right. I mean, the concentration question is important for investors here. You've got 10 stocks that basically account for 40% of the market cap of the S&P 500. And so on days like this, where you have maybe some weakness in the economy and much of the market is a little bit on the soft side, you might have a couple of stocks that have big market caps that could push the overall index up. And so for the last month, we've seen this kind of back and forth between soft data that pushes most of the stocks maybe a little bit lower, but then you get a good earnings report from one of those top 10, and it drags the market up higher. So that's why you're seeing the market really not making a whole lot of progress. Yes, there have been some new market highs, all-time highs, but really there's just been a lot of chop in the last month. So, investors should start taking some steps, we think, to prepare for perhaps some weaker numbers in the economy and some weaker numbers in the stock market over the next few weeks.
So you think we're near a near-term top for equities?
Yeah, that's right. We think there is the potential for some choppiness to continue and maybe turn into some more pronounced weakness, maybe a pullback 5%, 7%, perhaps even 10%. So we would be trimming here. We're going to keep our overweight to large cap stocks. We do believe in the tech story. We do believe in the artificial intelligence story, but we could reduce some of those holdings. For example, we were favorable on information technology and comm services, communication services. We decided to go back to neutral on comm services. That's a very concentrated sector. Two constituents of that sector account for roughly 70% of the market cap of that sector. So let's pull back a little bit, recognizing concentration, but keeping the overweight to information technology. We think that's a good way. And then recycle those proceeds perhaps into some fixed income. We like 3 to 7 year maturities here as a sort of a parking place while we get through the next few weeks.
Okay.